Don't look at your 401k. The stock market's bumpy ride over the last week has even the savviest of investors scratching their heads. So what should you do when the market turns red so that you don't lose all of your green? Kevin Matthews is the president of Building Bread and a former financial advisor. He joins us from Raleigh, North Carolina. Mr. Matthews, I don't look at them. I never look at them. I stopped looking at them in 1987 after watching the crash there. But should we ever touch our 401ks during a market downturn like we've seen recently?
9 times out of 10, that answer is no. So you're practicing the best practice and not looking at in times like this.
So that being said, when we say that, we say that for people that have a lot of money in the market. But there's the old phrase, nothing from nothing leaves nothing. There is a point where small 401ks become no 401k. So what do I do in that instance where I'm watching these markets and I'm saying, if this thing goes down any further, I got nothing left?
Yeah, well, that's a common understanding. What we have to realize is that time is your best friend in cases like this. For example, going all the way back to 2000, a correction, which is a dip of 10% or more, actually fixes itself in less than 30 days. So if you wait things out 9 times out of 10, you're going to be fine and you don't want to overreact in the market. Think of it, we're what, 27 days into the new year? This is very, very early for 2022, and there's a lot of time to recover and a lot of time for your money to grow.
Mr. Matthews, have you ever seen it be this volatile so many times in such a short span? I mean, just this morning they came out and said the GDP is 6.9%, which is an indication that everything is coming up awesome, as they would say in the Legos movie. And yet we watched the last 2 weeks as the stock market took a dive that everybody said they didn't see coming.
That is true. Now we've seen this a lot in 2020. That was one of the worst years we've seen in recent history. So, for example, when you compare this year, 2022 to 2020, remember we dropped 30% from February and March, and we actually recovered in 3 months. So we've seen worse. We saw these 1,000 point swings in the Dow up and down. This is very, very mild and tame compared to that. So we have to go back and remember in recent memory, things have been better. We've actually recovered. And even in 2021, we saw 70 all-time highs throughout the year. So a lot of times we hyper focus on the losses and don't zoom out and say, hey, look, I know it's bad right now, but it may not be as bad as what we think.
Mr. Matthews, we talk about your 401k, and that's one economic indicator that a lot of black people are familiar with. But the bottom line is a lot of our pensions are invested in the markets as well. How do we make sure that the people that are controlling our pensions are doing a good job with our investments too? What can we do? What can we look for?
That is a great question. So in a pension situation, you're more or less locked into those benefits. However, you do want to look at the statements that you have, and you do want to ask the pension manager, what are you investing in? How are you taking care of my money in a time like this? So this is one of those times when you get that statement, you want to zoom in and see who is managing, how much in fees are you paying? Because you definitely don't want to be paying high fees if the market is down, because that's going to disadvantage you even more. So take a look at it, see what's invested in it, and see how they manage times of volatility like this.
Now let me talk about market investing for dummies, of which I am a member, card carrying for decades. Bitcoin. Bitcoin is now down 50%. I still don't even know what it is, and I love the Saturday Night Live skit where they try to have Elon Musk describe it, and he can't describe things like NFTs and Bitcoin. That being said, is it a good time with Bitcoin being down 50% to invest in things like Bitcoin?
I would be cautious. I think for something like Bitcoin, it is still relatively new, and that type of volatility, those types of swings are very common with Bitcoin. Every other year or so, it drops about 50%. So you want to see if that is something that you are willing to stomach and if it fits in your portfolio. If so, the common recommendation is that you don't want to have more than 5% of your overall holdings into something that volatile. So if you are clutching right now, you don't like what you see in the market. The market is only down about 9%. Bitcoin is down 50. So you definitely want to consider how you're reacting now and how that could fit if you were
Right.
to hold Bitcoin.
And Kevin Matthews, by the way, was the smart brother that sat in front of you in econ class. He is also the president of Building Bread and a former financial advisor. Mr. Matthews, thanks for being with us this morning.